Welcome back. This is Investor Forever here, and this is week 8. So this week I'm coming at you a little differently. So I didn't trade any options this week. I sat on my hands pretty much, and I'm going to tell you exactly why that was the right call. But what I do have is something that I think is more valuable for your financial education right now. So the Federal Reserve made a decision this week that affects every single person watching this video, whether you're an investor, a homeowner, a renter, or just someone trying to figure out how to handle their money. What the Fed does touches all of it. And I want to break it down in plain English because most financial media makes it more complicated than it needs to be. On top of that, there's a foreclosure crisis building in Georgia right now that most people aren't talking about. And as a licensed agent and investor, I'm in a unique position to help people navigate it. So I want to use this episode to explain what's happening and what your options are if you or someone you know is facing it. So let's get into it. So a quick update on the week first. So the open house from last week went well. I'm now working with a client from that open house, helping her get pre-approved, and hopefully this is the house for her. So that's what joining the real estate team opens up. You meet people in person, build trust in a room, and those conversations turn into real clients. And that's the side of the business that I didn't have access to before, which was the retail side of the business. And on the offer prop front, I rejoined their team, but differently this time. So instead of coming back as a full-time dispo sales rep with exclusivity obligations, I came back as a JV partner. That means that I have access to their full platform of deals, but I'm not necessarily locked in. I can still wholesale my own deals. I can do my own outside stuff independently. I can work on my own leads, but I have the same reach without the constraints. So that's actually a better structure for where I am, which is more freedom. Got the same access and no ceiling. And options trading, like I said, I didn't take any trades this week, but it was intentional because the open house, working with a new client, and my real estate focus, my head wasn't fully in the market. And when you're trading, you have to be fully present. You shouldn't be, if you can't be fully present, you shouldn't be in the market. So distracted trades are losing trades ultimately. Discipline sometimes means doing nothing. And the cash stayed in my account. My ETFs kept compounding and I did receive some dividends, which I will be showing in this video. And the system didn't care that I sat out a week. So let's go into this Fed decision. So this just happened, July 29th, 2026. The Federal Reserve voted to hold interest rates steady at 3.5 to 3.75%. So the vote was 9-3, which means 3 regional Fed presidents actually dissented, meaning they wanted to raise rates, not hold them. That's the most internal disagreement we've seen from the Fed in a while. Now, let me explain why this matters and what it means for you specifically. So, the Federal Reserve controls the cost of borrowing money in America. When rates are high, everything becomes more expensive. Mortgages, car loans, credit cards, and importantly for this channel, margin interest. So when rates are low, borrowing gets cheaper and money flows more freely into investments. So right now, the Fed funds rate is at the lowest level since November 2022. But here's the complication. Markets are pricing in 2 more rate hikes by the end of 2026. So those 3 dissenting members that wanted to hike, now inflation is still running above the Fed's 2% target, currently at 3.4 on the core PCE measure. And energy prices have been a major driver. So what does this mean for the portfolio? So for the ETFs, it's a mixed picture. So with renewed tensions between the US and Iran, of course, that's still going on. That's pushing energy prices higher, mortgage rates. They've moved to a 1-year high. Higher rates for longer generally puts pressure on interest rate sensitive assets. So JEPI and SPY hold up reasonably well because they generate income regardless of the rate direction. The covered call premiums they collect are actually higher in volatile markets. So XPay is more exposed to rate sensitivity, which partially explains the drawdown that I was seeing if you hold XPay that you've been seeing as well. For the margin strategy, rates holding is, I would say, neutral to positive. So my margin rate at Fidelity is tied to the Fed funds rate environment as yours. Unless you're negotiating your rates, then they'll probably be calling you to renegotiate pretty soon. Rates holding steady means my cost of short-term borrowing doesn't increase this month. If hikes come in September as the market is pricing, that changes, but not today, so we're not worried about it. For the housing market, now this is where it gets real. Higher for longer interest rates mean mortgages stay expensive. Now, that's not the news that you wanted to hear if you're looking to buy a house within the next 3 to 6 months or a year. Expensive mortgages mean fewer buyers can qualify. If fewer qualified buyers means sellers have less demand. Less demand means some homeowners who need to sell can't sell. And that's exactly what's fueling this foreclosure crisis that I'm going to talk about next. So this is the segment that I feel most strongly about because this is happening in our backyard right now. So Georgia posted 4,549 foreclosure filings in Q1 of 2026 alone. That's up 77.83% from the same quarter a year ago. That's the second highest year-over-year growth in the entire country. So Atlanta had 2,520 foreclosure starts in Q1 2026, placing it among the top 5 metro areas nationally alongside New York, Houston, Chicago, and Dallas. Now, in the first half of 2026, Georgia foreclosure activity is up 52% year over year. That's the third highest increase in any state in the country. So the U.S. foreclosure rate has reached a 6-year high. Georgia is among the worst performing states, tied with Mississippi for the biggest increases in overall delinquency rates. So within Atlanta specifically, Fulton and Cobb County are leading in volume, followed closely by Gwinnett and DeKalb, all counties I work in. So let me put that in human terms because I know I've thrown out a lot of stuff that some people might not understand. So behind every one of these foreclosure filings is a family, is a homeowner who bought at peak prices, not knowing what the market was going to do, what it was going to bring. And then they slowly watch rates double, watch their adjustable mortgage adjust upward, watch their equity disappear, and now don't know what to do. Most of them don't know their options. Most of them don't even know they have options. Most of them are too overwhelmed or too ashamed to even ask. That's where I come in. And this is the part of the channel that goes beyond just investing. As a licensed real estate agent here in Georgia, I can help homeowners facing foreclosure in ways most people don't even know exist. So let me walk you through what those options actually look like. So option one, as you might know, there's the traditional sale before foreclosure. So if a homeowner has enough equity, the cleanest solution is selling the property before the foreclosure completes. This in turn protects their credit, pays off the mortgage, and potentially puts money in their pocket. As an agent, I can list it, price it correctly for the current market, and get it sold. Time is critical as the foreclosure timeline in Georgia moves fast. So option two, there you have a short sale. So if the homeowner owes more than the property is worth, which is increasingly common given the recent price softening we've seen over the years, the short sale allows them to sell the property for less than the mortgage balance with the lender's approval, of course. It damages the credit less than the completed foreclosure, and it gives the homeowner an exit with dignity. I can negotiate directly with the lender on the seller's behalf in this situation. So option three, you have the subject to or creative finance approach. So this is the investor side of what I do. In certain situations, I can work with the homeowner to take over their existing mortgage payments without formally refinancing. They'll get out from under the burden of the property, and I take on the property and the payments. And done correctly, this can be a solution for homeowners in situations that traditional financing can't touch. Option four is the cash wholesale offer. Now, this definitely does not work for everybody, and I don't encourage it, but this is an option that you may have as well. So for properties that need significant work or sellers who need to close fast, I can connect them to my cash buyer network and close rather quickly. There's no repairs, no contingencies, no waiting. These investors, they move quick. And in the process like this, you have to. So the bottom line is this. If you're in Georgia and you're facing foreclosure or you know someone who is, please reach out. I'm not just an investor looking for a deal. I'm a licensed agent with a fiduciary duty to put your interests first. We find the right solution for your situation, whatever that looks like. My contact information is in the description below, and I will place it here on the screen as well. All right, so let me tie the market news back to the portfolio specifically because that's what this channel is. The S&P 500 closed at 75.75 on July 7th and has been trading within the range ever since, with some volatility driven by earnings season and the geopolitical situation, of course, with Iran. The market rallied sharply on July 30th with the S&P up 1.7% and the NASDAQ up 2.8%, driven by Microsoft's earnings beat and semiconductor strength. So what does this mean for JEPI, XPay, and SPYI? So covered call ETFs like JEPI and SPYI, they perform best in sideways to moderately bullish markets, which is exactly what we've been seeing. So the covered call premiums they collect are highest when volatility is elevated. So a choppy range-bound market with geopolitical uncertainty and a divided Fed is actually a favorable environment for income ETFs, believe it or not. They don't necessarily need the market to go up. They just need it to move. Like, as long as it's moving, it's going to do something. So XPay's continued drawdown, as you've seen, has always been kind of fluctuating here, but it's around that same 1 to 5. At highest, I think it was like 7% in the red. This is where it's kind of just been fluctuating a lot. But overall, the account's only down 1.6% with everything going on in the market. So XPay's continued drawdown is something that I'm monitoring. The Fed's 20%, the fund's 20% target yield requires significant option premium generation. And in certain market conditions, that's harder to sustain without NAV erosion. So I'm not panicking, but I'm watching the total return price very carefully, because at the end of the day, this is still my money. The drip keeps running through all of it. Every dividend, every week, regardless of what the Fed does or what the market does. Compounding doesn't pause for geopolitics. So brief update on Divider. I know I've talked about this on this channel before. I didn't do much of this week either. The core functionality is still built. The aesthetic is just not where I want it. Final piece is that Plaid integration, which that's fairly simple. I need to go ahead and finish this up so I can drop this and let you all play with it, because it can be a really good tool just to manage and balance everything and see everything in one picture, because the banking connection absolutely makes the app useful in real time rather than requiring manual entry. And this is the piece that I'm more focused on getting right, because that's what makes Divider different from any spreadsheet you can build yourself. So when Plaid is integrated, you connect your Fidelity account or whoever you're using once, and Divider pulls your positions and your dividend payments, your margin balance, cash deposits, all automatic. And you see your entire financial picture: income in, bills out, portfolio growing, margin being used and replenished, all in one place, built for exactly this strategy. My subscribers, you all are still first in line when it launches. A man of my word. But that's pretty much week 8. So the Fed held their rates. We got foreclosures surging all over the place. Real estate clients, they're in motion. I'm back on OfferProp as a JV partner. I may leave the options alone and just kind of focus on getting rid of some of these deals in the portfolio. And if you're an investor looking for any potentially cash flowing deals, if you're looking for fix and flips, I have access to a lot of off-market properties here over at OfferProp and as a licensed agent. So definitely reach out to me if that's your thing. If you're looking for some off-market opportunities, definitely give me a buzz. And yeah, all of this that I'm doing, that I've done this week, was the right call for me, because at the end of the day, the portfolio is still compounding and I still got Divider on the way. So if you're in Georgia and you're facing a foreclosure situation, or you know someone who is, reach out directly. The link is in the description. I can help you figure out the right path forward. So next week, let's hopefully we have some deals under contract or something. We've been building to that, and it's time to deliver. So subscribe if you haven't, and share this episode with anyone in Georgia who needs to hear the foreclosure segment, as that information can genuinely change someone's situation. The more we know, the more we can do. Investor forever. Let's build.